Hi there guys, this is Brian here with Crypto Brotherhood, and today I'm going to be sharing with you how I day trade with leverage on Bitmex. So couple of reasons why I choose Bitmex is because it's one of the platform that you can leverage. The other that I know of being Poloniex, but Poloniex goes up to 2.5 times leverage, but for Bitmex I believe for some coins they go up to 100 times, so there's a whole lot more leverage, and the interface is just more intuitive, easier to use, and pretty responsive. So I'm gonna head over to Bitmex to show you. Right, so here you can see they've got a couple different coins that you can trade with. There's Bitcoin, Cardano, Bitcoin Cash, Ethereum, Litecoin, Ripple, and you are, for all of this, you'll be trading contracts. So you can go to the contracts page to read more about it. They have different different funding rates, interest, and all that stuff. But for now, I'm just going to be sharing with you how I day trade. So when you place an order, you can do a limit order, so you can buy the number of contracts you want to buy. So they go by contracts, so one contract would be equivalent to this. So for example, now I'm on Ethereum. One contract of Ethereum would be worth 785 and 3 cents in USD. So this is the amount of contract you want to buy, and this is the price that you want to buy at, limit price. Of course, there's also market. So for market, you'll just buy up, say for example, you want to buy 100, and then if you buy 100 of this at market, so it's gonna buy 100 of this Ethereum contract at whatever price it is. So for example, now is 0.08420, and there's 58 contract here. So if you buy 100, you buy all here, and then you move on to buying at the next price, next best available price, and so on until you fill up 100 contract. And there's a couple more. There's stop market, trailing stop, take profit limit, and take profit market. So with Bitmex, you really have lots of different choice and a lot of control that you can put in place. So now I'm gonna be alright. Before that, you can see recently I entered into a trade for Ethereum at 0.08395. I wanted to buy 47, but only managed to get 17 filled, but that's alright. So how I would day trade on Bitmex. First, I'll go on a 1 hour time frame, and I'll just want to see, is Ethereum in an uptrend or a downtrend. So in this case, you can see, at least for now, it's in a uptrend. So I've drawn my support and resistance here, as you can see, and the price looks, you can see it's going upwards. My 10 period EMA is above 30 period MA. That's bullish. Prices above the Ichimoku cloud, bullish. So I'll say this is a uptrend. So next, alright, and then for me, I just feel it's safer to trade with the trend. So if it's an uptrend now, I want to go long and not short, just to be safe, because it's generally more forgiving and safer to go with the trend rather than go against the trend, because if it reverses, if the market do a trend reversal, it'll go in the other direction pretty hard, and you don't want it. And also, if you are with the trend and you didn't exit the market when you should, you would have more opportunities as long as the price is still within the trend, the same trend. So after that I will go to 15-minute time frame. So in an uptrend, you generally want to buy in when there is a pullback. So there's a couple of ways you can do it. After drawing the support and resistance, you can buy in when prices touch the support line. So for example, here would be a good price to buy in. For me, I bought in at say 0.08395, so that's 8395, about there, right? So why over here? Because it's near the support line. Also, the stochastic RSI says that is oversold, so that's a good buying opportunity. And if you zoom in closer, you can see right about there the price of the stochastic RSI did a crossover, the blue over the red, so that's a bullish indicator. And on the MACD you can see the histogram starting to turn around as well, so that's a good place to buy. Besides that, another thing you could do would be to use the Bollinger Band, which is this blue line that you can see, right? So but for this case, the Bollinger doesn't work as well, because as you can see here, the support line works better, but there are certain times where the Bollinger does work as well, such as over here and over here. In this case, Bollinger works better on when to sell, for the price ceiling rather than the price floor. As you can see here, touch, lots of points right here. So for this trend, I would say Bollinger works better to determine when you want to close and take profit, and for the support line would be for your entry point. Of course, you want to check against your technical indicators to see if it's really good entry. So now that I've entered the position, what to do then? You would want to always set a stop loss to prevent the prices going against you. So in this case, I will set the stop loss, say maybe about here, somewhere below your support line or the Bollinger Band, basically anywhere that if the price goes below, then it's signal a trend reversal, and in that case you want to get out really fast, because when trend reverse, the prices goes really fast and hard. Likely there'll be a lot of volume, and if you don't exit in time, you could end up holding backs. That's not good. So to be safe, if you don't want that to happen, you could set a stop loss at market price. So once it triggers that price, you just exit all your position at whatever the market price is. So you use here stop market. So initially when I entered, I set a stop loss somewhere below, and as the price goes up, I trail the prices and follow along. So say for example, when price is around here, I'll set here. Ideally, whenever the price goes in the direction, let's say you long and price goes up and it's got a fair amount, you want to readjust your stop loss, which was below your entry price, to the entry price, and as it goes up you want to trail along and slowly increase it, but not too close, because then you would get close out your position if there's a fluctuation. So now so far so good. I entered at about here, and now it's here. So what's my play here, right? I'm gonna be monitoring closely and adjusting my stop loss along the way. Couple of exit point I see shorter term once it hit the Bollinger Band, longer term if it hits the resistance, and of course I'll use the indicators to see when it's overbought. That'll be a good time to exit as well. So there you have it. And now I'll be explaining to you the different type of orders. So first you have stop limit, which is good for setting stop losses. So for example, now price is 0.08436. If I want to be conservative and I want to set, say, if it drops below 3430 and I would sell it at 3430, then I would do this, set it at there. So what happens is you won't place an order. Once you set this, you won't place an order here yet. Your order won't be in the order book, but the moment the price drops to 0.08430, your order would be placed at this price. So you can change this price as well. The stop price would be your triggering price. Once it reaches there, it will trigger your limit price. So if you want to set exactly at the same price, you could do that, but I suggest that sometimes there are times where you want to set at above or below as well. So because if you set exactly the same price, so for instance it drops, for example, you see now it drops to 2.6, right? 2.6, but the moment it trigger, if someone buys like say a lot of contracts, like maybe 100 contracts, so you'll like eat through everything. So by the time it gets triggered, your price may have been up here already, right? Like 30, someone else would have undercut your order, and then you've got to wait for the other orders to get filled first before reaching yours. So if you want to prevent that, you can set a different price, or you could also set a stop at the market. So what this means is there's a stop price. In this instance, say 0.08430. The moment it hits this price, you'll sell 17 quantity at whatever the market price is. So for example, say there's 17 quantity. Let's assume the price, your stop price is here and it gets triggered. So you buy here and then you move on to the next, and you buy, keep buying until your quantity is filled. So this is useful for if you wanna clear your exit or position, your entire position. Once it reaches that price, you wanna be safe. You think it's gonna dump a lot lower, you wanna exit quick. Stock market is the way to go. Next, you would have take profit limit. So let's go back to the charts. So say you want to use the Bollinger Band. You think once the price hit the band here at 0.08453, it'll bounce back down. So you want to take profit at here. What I can do is to set a take profit limit. 845. So you think once it hits 845, you can do this. So if you take you set this order, what happens is once the price reaches 845, you place your order here. 17, you'll enter 845, right? Somewhere up there, 845, right? So you'll put your sell order at 845. And next one will be take profit market. Is pretty similar as well. So in this case, once it reaches 845, you'll sell 17 at the market price, the prevailing market price, and move on to whatever next price there is. So there you have it, 4 different stops for you to play around with. If you want to use stop limit and stop market to protect your downside, and if you want to take profit, there's a take profit market and take profit limit. Yep. And one of the neat function for Bitmex is if you click this calculator here, you can check your profit and loss. So say you enter in, you buy 17, you can enter your entry price, your exit price, the amount of leverage you use, and it'll calculate here for you your profit and loss, your ROE, profit and loss. So works both ways for long and short as well. So this is pretty neat. And you also have a target price. So how this works is you can put your entry price in here, the amount of leverage used, and the percentage of ROE you want. So let's say you wanna do 150% ROE, and then you'll be good to exit. It shows you the target price. So you can just mess around and the price will change. Next we have liquidation price. So you just set say how many contracts you buy in, what's your entry price, your leverage, and they'll show you your liquidation price. So you don't let the price reach here. This is your cut off zone. You reach here, you'll close out your position and you'll lose everything on that position. So I find that for Bitmex, 10 is still alright. There's a bit of a leeway for you before you reach the liquidation price, but as always, you still want to set your stop loss way ahead above of this. And alright, so before I end the video, it's just a couple of advice for you guys. So you want to plan your trades ahead of time before you enter. You want to be I'll say active and anticipating the price action rather than react to the price action, because if you react to the price action, you are buying based on FUD or FOMO. Like FUD meaning like fear, uncertainty, doubt. Like you see prices go down like really fast and then you are scared and then you sell at a loss. Or FOMO would be fear of missing out. Say like when price goes up a lot and then you think, oh shit, I've got to get in on the action, and then you buy at a higher price than you should. So typically if you plan your trades right, you can set your orders ahead of time using say limit order or market order. So if you do your charting properly, your technical analysis properly, you'll be able to get to predict and forecast a good entry ahead of time rather than reacting to the price action, because when you are reacting, the market has already moved and you are behind already. So that's one thing. Next would be not to overtrade. What I mean by this is that sometimes if you overtrade, you'll tire yourself out quick, and then it might not be as worth it because your effort would be spread out over too many positions, and then you'll go after like lots of tiny gains rather than if you trade just right what you're comfortable with, and you'll be at your optimal trading game. Another thing is try not to pick tops or bottoms. So I mean, ideally, in a perfect world, everyone wanna sell at the very top and buy in at the very bottom, but that's not very practical. So if you don't catch the top or the bottom, you know, the exact top or bottom, that's alright, but at least try to get close. Don't beat yourself up over missing it, because it's alright as long as you are off by not too much. It's fine. And next would be to manage trades with no regrets. So this is, you don't want to get too emotional when you are trading. You want to trade with a strategy, stick to your strategy, and if it goes wrong, you know, you want to exit out fast, minimize losses, and not let it get to you. So, you know, fear and greed, these two is your worst enemy. Greed is when you let your position continue running when you should be taking profit, and fear is when you know, your strategy says it's fine, don't sell yet, but then you let fear get the better of you and then you sell at a loss. So treat it as a, you know, if you trade well, you know, the money will come to you. You don't try not to get affected by your wins or your losses. Just trade well and just be logical, follow your strategy, plan ahead of time, and things will go well. Next would be to use the order book as well. So order book can come in handy when you wanna place your entry point or your exit point, because say for example you wanna check here, right? There's gonna be at certain places where there's more volume at a certain prices. So say for here, you can see right about these prices, you see the volume is really high. So if you wanna set your stop loss, you know, you can set in between all this, because you have all these other trades to kind of buffer it for you. And then say if you wanna set in your entry price, you ideally want to set at maybe this 8441, because if you set, you know, way below here, when others buy in, you know, it might reverse before even reach your order, your price that you place at. So the order book can come in handy. And also there's something that I realize sometimes if you're trading on using Coinigy to trade the prices, there are times that the price don't change as fast as the order book here. So if you want to see the price action, this is the most up to date here.